Hello everyone, it's me the Boss Dog, and today I'd like to talk to you about the best telco you've never heard of, Gamma Communications. Let's do it. Alright, so in this video I'm going to give you an overview of Gamma, who they are, some history and what their strategy is moving forward. We're going to look at their financials, their share volume, dividend commitments, etc., opportunities and challenges as I see them specifically. And then we're going to look at some analyst guidance as well as my own price targets, and we're going to wrap that up with a conclusion slash whether you should consider buying Gamma or not. That's the plan. However, before we do any of that, I have some disclosures, and I think this is quite important to get out there. So, first up, I work in the telecoms industry, have done for my entire career effectively. I have worked with, although never for directly, Gamma, but again, not for 7 years. When I was working with Gamma, my work involved commercial agreements on non-geographic numbers, SIP, so that's a type of IP usage, and mobile, technical configuration of call data records into a billing system, pre-sales consultations, basically how to build modeling and spreadsheets if you're reselling the service to other companies, as well as was involved in basically my company being a guinea pig for some fraud-based monitoring and prevention and some clever AI stuff that was looking at network usage to stop toll fraud from happening. I know several senior employees at Gamma, one of them fairly well, though only professionally. Several of their employees are on my LinkedIn as connections, but I have no personal relationship with any Gamma employees. My current employer, and again I do still work in telco, has no relationship with Gamma as far as I know. That employer is also in the telecoms industry but serves different audiences and markets, and I would not say is a competitor to Gamma in any way. It's also a private company, the one I work for currently, and isn't traded, so there's that. Also, just to kind of really put out there, I've not been asked to do this review by Gamma themselves or indeed anybody else. I'm not going to be receiving payment for it, whether in cash or any other form of compensation, say for example shares. In short, I'm doing this video by my own volition. All comments in it are mine and are personal to me specifically. And in terms of my current position with Gamma, I have 489 shares at an average price of 19.58. They are the fourth largest holding in my portfolio and my main telco play. So all that out of the way. Hopefully that's clear and transparent. If any of it's not, then obviously put me a comment. But hopefully it's clear and nice and transparent. And now we can stop wasting time and get going with Gamma. All right, so fair warning, I'm probably about to get a little bit nerdy, but I'll do my best to not be too much of a nerd. So in terms of an overview of Gamma, to start with, it's a 1.7 billion market cap company, and it's listed on the FTSE Alternative Investment Market, or AIM. It listed in 2014, and it trades under the ticker Gamma with a single M, so GAMA. It's currently the 12th largest company on the FTSE AIM by market cap. It was founded in 2001, and its headquarters out of Newbury, Berkshire, United Kingdom. Now, for anyone who doesn't know, and Newbury looks a bit weird, but Newbury, Reading, Guildford, and then like into West London, that kind of west to east line that kind of cuts across South England, that is like where all of the telecoms companies are headquartered. I don't want to say all, of course, there's lots of other ones, but there's a significant concentration of telcos along that line, basically. Vodafone also has its European HQ in Newbury, and then there's lots of companies, like I say, along there as well. So standard stuff, really. In terms of a bit of history about Gamma, it was one of the first companies in the UK to move into IP, so usage over data instead of traditional phone lines. It built on a fiber network that it acquired from Atlantic Telecom, who, by the way, I'd never heard of before, and then moved into selling to resellers from a Swedish company called Telia, who you may have heard of. But they acquired about 100 resellers, and a reseller basically sits between the network provider and the customer. Typically will aggregate lots of services and then sell them on to customers. So basically Gamma moved vertically up the supply chain there. 2018 it became an MVNO, which is a mobile virtual network operator. It basically just means it sort of plugs directly into mobile networks like sort of Vodafone or anyone who actually has masts and has the spectrum and the network, etc. It then added data in 2010, becoming an ISP, and since 2011 it's been building out its own platform called Horizon, and basically building on it ever since. In 2019 it launched a virtual PBX, which is basically a business grade phone system. Legacy-wise, PBXs were provided by companies like Mitel, Avaya, Cisco, but they were expensive, fairly cumbersome, didn't scale great, needed physical presence in the office. So again, another reason why it was expensive. And oftentimes those companies were very slow moving, not particularly easy to integrate. And so a lot of kind of more forward-looking companies started to introduce what's became known as virtual PBXs, which is where they more or less built a lot of the functionality of phone systems themselves. Now, in fairness, if you wanted an American version of this, I'd probably suggest 8x8, which is a listed company over there. Not particularly big, but it is tradable, who also have a pretty sophisticated virtual PBX. And on top of that, GAMA also have a contact center, which is probably exactly what you'd imagine. It's the phone system and the metrics and basically the supporting infrastructure to enable businesses to have customer services and customer operations, etc. Since 2018, GAMA started to operate in Europe. It first acquired a business in the Netherlands and then since has been expanding into more European countries, notably Belgium, Germany and Spain. It remains the UK's largest provider of SIP. It has 1.35 million trunks, which basically means it can route simultaneously 1.35 million outgoing calls via SIP. And that number is up 14% year on year. Now, that might be surprising to people who aren't in the industry, but I mean, legacy telcos were like really trying to sweat their assets, and I'm sure this isn't a UK issue either. And when I first started in the industry, I visited both GAMA and BT's IP office, what they used to call it SIP conveyance. And BT's office was like a three-man band in Wolverhampton. It was proper like amateur hour. Whereas GAMA, I went to Newbury and it was like a 180-person organization at the time, and so pretty small, but really kind of nimble, going places, and was already quite sophisticated in its outlook. So yeah, pretty interesting stuff. GAMA themselves call themselves a UCaaS company, or Unified Comms as a Service. I've heard it called multiple things over the years. I guess that's what it's going. Originally, it was just UC. Then I've heard it be known as FMC, Fixed Mobile Convergence. But here we've got UCaaS. The group itself, as in GAMA, has 3 operating segments, which is UK Direct. So that's where they sell to businesses directly. UK Indirect. So this is where they're selling to resellers who then sell on to business. And Europe. Makes sense, I think. Although GAMA themselves don't report, at least publicly, the split in each one of those segments. Each segment has 3 focuses split between micro, SME, and enterprise. And that's really just a reflection of the business customers' needs that each segment will be serving, right? Like a customer with 5 users is going to be very different to one with 5,000 users in terms of their expectations of a phone system and what they're going to be using it for. And so GAMA basically builds products in each segment for each size of business accordingly, which again is super standard in the telco world. In terms of its share price performance, it's up 400% over 5 years. However, it's actually down 21% from its all-time high on the 5th of September, which for me is when I opened a position in GAMA. Could have been slightly more patient because, like I say, I was so excited to be buying GAMA under 21 quid originally that I just got very excited. I thought I'd timed the drop quite well, and then it just randomly dropped. Well, not randomly, right? The market decided it should discount it further. So it dropped 20% in just a matter of days, basically, which to me was a great time to enter because I think it's a real quality business. In terms of what GAMA looks like today, so as of June 2021, which is, as far as I can tell, the most up-to-date numbers publicly available, it has 1,700 employees, give or take. It does also have a share scheme, so 759 of those are currently on GAMA's GAMA employee share scheme, and 836 also have GAMA shares in their private pension. Now, I'm not quite sure whether those numbers are unique. I'm sure there is significant overlap between those two. So again, from my perspective, it's actually good and pleasing to see significant employee ownership. I think it's going to be good for a business. GAMA is also an ESG company. For those that are interested in that, it's been certified carbon neutral for 15 years. So before your call. Which again I think is admirable. And I suppose what's also admirable is the financials. So what I put here on the left is just the most recent available, which is 6 months ending to June 2021. Now what I point out really here is the change year on year. GAMA has consistently put out these kind of numbers between sort of 20 and 50% year on year, and even though it's growing, so obviously it gets harder to maintain those kind of percentages, it still continues to deliver basically. Maybe the dividend per share might be a little bit disappointing to some, and we'll come on to dividend in just a second. But actually, this trading update was in line with expectations. And to be honest with you, Gamma is very reliable, hitting their expectations, right? Like if Gamma says they're going to produce X, they tend to produce X. They're pretty reliable. Again, some of these kind of smaller companies are less good at that, but Gamma actually has historically done a great job of doing that. In terms of longer term horizons, some of these numbers are really fantastic. So revenue's up 84% in 5 years. Gross profit is consistently north of 50%, which maybe in other industries isn't that impressive, but in telcos, and especially in legacy telcos, where you've kind of had a move to things, away from that standard calls and lines, it's really put a lot of pressure on margins. Historically, companies really used to rely on usage, and massive margins on usage to basically boost it. But usage revenue and usage margins just aren't where they used to be anymore, and a lot of slow-moving telcos have really been caught up in that and seen their margins and in many cases their business just no longer work. However, Gamma has been consistently good at keeping this north of 50% and actually has been mostly growing it. I appreciate with the table there it might look like it's under some pressure, but actually part of the reason for this is that they acquired a fairly large business in Germany where that business has a slightly different business model. Without acquiring that, their margins would have actually been 55%. But again, Gamma, typically speaking, has shown success kind of improving the businesses that they bought. And I'm sure here the plan is going to be to kind of move this business more into what they do best. Net profit is up 247% over the last 5 years. It enjoys a 17% margin, which again is pretty high for telco. And that margin is actually accelerating. If you look at a 5-year average, which of course would include the most recent year as well, it's 12%. So again, like as Gamma kind of does more, acquires more, and builds more, it's basically able to become more efficient as a business. So again, that's really fantastic. In terms of earnings per share, we're looking at a 254% improvement. That's diluted, and a 137% if you look at adjusted. And that will include like one-offs, basically, is the difference there. And again, that's typically been acquisitions where Gamma has started to really turn itself into quite an acquisition-hungry business. And if you read their trading statements, they're very public and open about the fact that they have a number of opportunities constantly that they're reviewing, and they are buying lots of businesses, not just kind of expanding, but also kind of buying businesses that will enhance their product offering in some way, which again we'll look at in a bit more detail very shortly. Has a rock solid balance sheet, honestly, very little debt, depending on exactly how you class the debt, but really the underlying is 14 million. That's like real debt, like what they have in borrowing. There's some other things, to do with like accounting moves that, depending on where you look, goes as high as like 100 million. But again, it's fairly artificial. If you look at the real debt, it comes in at 14 million, the number that I have anyway, which I have checked a couple of sources. This number I think might be the most impressive, especially if you work in the telco industry. I know some of my subscribers do, but to me this is really incredible. I guess that's why I've called it incredible, right? So in terms of its revenue, 89% of its revenue is derived from recurring revenue, which would actually be 94% if we exclude the acquisitions in the last 12 months. Now, again, this is really unheard of. Like when I started in telco 13 years ago, my employer was like 70% usage, which was nothing uncommon at all. My last employee, we were seeing kind of 80% to 85%, and that was really seen as like pretty industry leading as well. This though is like the highest I've seen, and again, what it really shows you is that Gamma have been very successful in navigating kind of the move that we've seen in the industry from relying on revenue to basically relying on rentals. Effectively, this recurring revenue here is going to be for things like support, for hosting, for line rentals, and in the industry I've heard the term race to zero quite a lot, and really that relates to usage. And if you think about things like Skype or any kind of messaging, like this is basically a data event that telcos don't really make much money from, especially if you're using like your landline provider, right? So these kind of usage events are no longer the money maker that they used to be, and likewise SMSs are basically infinite and free in most cases. So again, like Gamma has been very successful in doing that, whereas other companies haven't. So to me, I think that is incredible. Its return on equity is 29% over the last 5 years. Again, just pretty incredible to me, to be honest with you. And yeah, generally speaking, I love the numbers. I think they're pretty hard to fault. So obviously do your own research here, but I think the numbers are really good, even for anyone not in the industry, right? You can see like the numbers are all moving in the right direction, and yeah, it's super hard to knock it basically. All right, so I wanted to call this out separately. I did think about putting it onto the financials bit, but actually I think it's worthy of calling out. So we touched on EPS already, but again, let's look at the shares, the dividend, and the dividend strategy. So first of all, Gamma have a publicly stated policy of increasing dividends between 10 and 15% per year, which they've met since listing. The current financial year is going to be 13%, so smack bang in the middle of that range. And really what we're seeing is that because earnings are increasing faster than dividend, it basically means that their payout ratio has been decreasing over that time. So again, like it's becoming an increasingly safe dividend. Gamma also guides between interim and full dividend. And for any non-UK investors, by the way, it's very common in the UK for companies to pay out twice a year, and they call it an interim dividend and a full dividend. Depending on the company, they have different ratios, but Gamma has consistently been 1 to 2. So if they have a 10p a share interim divvy, it'll be a 20p a share full divvy. They've been doing that also since listing. And assuming that they do that for their full dividend in the current financial year, this is a 57% increase in the divvy over the last 5 years, which again is actually showing a slight increase if you look at a kind of a rolling 5 years. So that's positive as well. Dividends are super well covered, as I sort of briefly touched on there. Current financial year looks like it's going to be 17% of earnings, assuming guidance and again the point above. And again, this has been reducing each year because earnings have been outstripping growth in dividends. So if we look at 2016, so 5 years ago, their payout ratio was 35%, so still pretty modest and sustainable, right? But it's now gone back to 17%. And really, although Gamma were less explicit calling this out in their trading information, they're happy with their what they call a progressive dividend policy, and like they basically want firepower for acquisitions. That's kind of it, really. Again, which I think is absolutely fine because this company is still in the growth part of its journey. So yeah, it definitely doesn't pay a high dividend currently. It's at 0.71%. But again, I think that's partly an extension of just how good the share price has been on a ride. By the way, that 0.71% is closing as of the 9th of November, so very up to date. So it's not based on all-time high or anything like that. It's pretty recent. And again, they've been focusing on acquisitions and development and what they call progressive dividend policy. For me, Gamma is the very definition of a dividend growth company, right? Yeah, okay, it's an unspectacular dividend now, but if they can keep up kind of 13% year-on-year dividend growth, that's going to look really great in the medium to long term. So that may well appeal to dividend growth focused investors. Their current shares are 96 million, which is an increase of 0.7% year on year. I would note that although there has been an increase, all the additional shares were linked to one of 3 reasons, either to staff options, so again, more engagement from employees is never a bad thing for me, for consideration for acquisition, so basically instead of taking debt or paying in cash, they basically paid in shares. Or interestingly, and I'm not sure how common this is, I haven't actually seen it before, but basically when they bought a couple of companies, 3 in total actually, they used their shares as basically incentives to key vendors of the companies that they were buying. So basically key suppliers of those companies that they were buying. They said, please keep supplying Gamma. Here's going to be some contracts. Please do this or do that. Commit to this, and we'll give you some shares. Okay. So again, I guess maybe that may or may not be unusual. I'm not sure. But to me, it's again a Gamma kind of tying in what it needs to for the medium to long term. So it's now made sure that suppliers to its business now have a vested interest in making sure that Gamma is successful. So I don't know specifically, they haven't called out or named or given details, but I'm sure that they have a good reason for doing so. So since listing in 2014, Gamma has increased its share count by 8.78%. However, a lot of this was done very early on. I'm assuming for acquisitions, but my brokerage, etc., doesn't really go back much past 2016, so it gets a bit hazy for me. But since 2017, there's been a sharp reduction in that rate of increase. So since 2017, it's only increased its shares by 1.78%, so definitely worth bearing in mind that more recently it's been more modest. And again, to be fair, I do expect Gamma to continue to increase, especially because it has share ownership from its employees. Sorry, and it's a growing company, and it may well need to finance. And although it does have a lot of cash on the books, it does actually generate quite a lot of cash as a business. It's obviously shown that it's willing and able to use shares in consideration for buying businesses, and again for linking third parties into it. So to me, it's not a problem. I'm much more interested in EPS, which we just were seeing is up hundreds of percent. So as long as that number continues, then I'm perfectly okay with it. And again, you need to kind of consider that this isn't your typical legacy telco, which is maybe throwing off a lot of cash but isn't showing a lot of growth. This is a company that is really still in the growth stage of its business, right? So you need to kind of consider that it probably will be adding to its share count, at least in the medium term, for the reasons we just talked about. So just something to consider though, because I know that is something that people look at, and I think that's fair. But again, I think here there are perfectly reasonable explanations for it, and it's supported by that great performance in EPS growth. All right, so in terms of opportunities, and I suppose this is your bear case. First of all, UC, or whatever we're calling it now, but the unified comm space within telco is expected to grow year on year by 21% between now and 2028. That's based on some market research, so that's going to be positive for Gamma. Also in the UK, it's going to be the end of the PSTN network by 2025, which is basically the old school phone network. There are an estimated 3 million connections that are feasible in Gamma's remit to pick up. Obviously, that's going to be a competitive landscape. But Gamma's actually already, again, significantly ahead of the curve, so it's already developed several products to help address this. And it actually purchased a company called Mission Labs in 2021, specifically because this company they'd worked with over a year beforehand, and it's helped them develop a product called Phone Line Plus, which will basically make it possible to bypass the PSTN and plug straight into their integrated Horizon platform. Then they also have something called SoGIA, which is a broadband that allows for broadband without the traditional phone line. So I'm assuming this is some kind of fiber to the cabinet or fiber to the premises. Not actually sure, but historically, you'd have like a phone line and then put like a DSL broadband internet connection on top of it. But again, no PSTN network, no phone line means no traditional broadband. So companies are having to go around that as well. So again, Gamma here showing this significantly ahead of the curve and has already identified as an opportunity, basically. The market across Europe and I think in most countries, including the UK, remains significantly fragmented. Many companies that the likes of Gamma and Co will be targeting remain on what I've called old world technology. So not just PSTN, but something called ISDNs, so kind of digital phone systems, sure, but again, no longer kind of new and shiny, and this has implications for the end businesses will be paying more for these services. Margins typically for suppliers are less good on old world solution. It's harder to scale and leverage and everything else. So again, if Gamma is able or continues to be successful in kind of guiding customers from old world to new world technology, that's going to be a significant win for Gamma. Most of its services are built in-house. Historically, like many years ago, Gamma even bought companies specifically to buy software houses, to basically help build out their Horizon platform. And to me, it's one of the main draws of Gamma. I work in what's called BSS, which is basically extracting value from the network. I think a lot of phone companies are really bad at this, which is great for my employment, but ultimately not great if you're an investor. Whereas I think Gamma really gets it. Gamma has built a scalable solution that really understands how to get value off of the network, and it just scales really beautifully. Like I said quite recently, I've started a new job, so I've been having lots of intro chats with people, and the amount of times that Gamma comes up as kind of an aspiration that it's just a good business. People have worked with them or competed against them or been supplied by them. I think everybody. I don't think I've heard a bad thing mentioned about kind of the product itself. It's a very scalable, well built and well thought out system that will scale. And again, to me, this is why I'm relatively optimistic about things like margins and its growth, because I think it's just got a foundation that will naturally lead to those things. And again, it's going to be able, therefore, to either compete on price because it won't have to pay basically another company's profit, or potentially it will be able to offer kind of an end-to-end service. I've heard it called managed service, and again, this is typically where you offer like a wrap and you say, well, Mr. Customer, you're going to get very little in terms of usage, you know, it's all in, but there's going to be a very high rental price, which again is the way that telcos want to be moving, because it makes sense. These typically also have longer contract durations, less churn because it's harder to kind of change your entire IT infrastructure, whereas, you know, if you've just got a mobile contract, is way easier. So there are real advantages to this as well. And although it's kind of harder to see in the numbers, my strong suspicion is that GAMA will have incredibly low things like churn and those sort of things that, again, cost the telco industry a lot of money, which will eventually feed through to GAMA's bottom line as well. But GAMA isn't just doing things internally. One of the really amazing things to me was that when COVID lockdowns happened in the UK, so March 2020, GAMA basically already was in a good position to kind of offer like flexible and remote working, but it basically immediately, like in a 3-month period, was able to come to market with what was called Microsoft Teams direct routing, where, you know, instead of just having to do a Teams to Teams call, it basically integrated it with its phone system, so you could call directly from Teams directly to somebody's like mobile phone, and likewise somebody could use their landline to contact you via Teams. So you just had like this very slick integration between the IT and telco worlds, which don't always play very nicely together. And you know, I've worked with companies beforehand that would take years to come up with those kind of like Skype integration or that sort of stuff, you know, and as far as I can tell, it happened in a matter of months. You know, so again, GAMA was able to basically benefit from that, and I would expect GAMA again to benefit if there is any additional lockdown, because it just not only is GAMA incredibly technically sophisticated as a company, but it also encourages existing trends, again, globally, but certainly in the UK, where companies need to have that flexible working, right, and that integration. So again, I would expect that. And exactly this. So GAMA has consistently reported the fact that they haven't been materially impacted by UK lockdowns. Most of its revenue is recurring, right, so it's already committed. And interestingly, actually, GAMA saw incredibly low levels of debt. Like, it continues to be a concern in the UK telco industry about whether, you know, there's going to be lots of debt happening. But GAMA hasn't seen anything yet. It historically has had very low levels of debt anyway, because, again, I suspect it's so integrated that a company can't not pay for its phone system and IT support. It just is like underpinning a lot of companies. So it's one of those need to pay, and potentially GAMA maybe is picking good customers as well, and etc. Right? If I think about that as well, it's likely to be the case. So certainly when I did work with them, admittedly now it's like 7 years ago, but you know, they when we looked at like pre-sale work, kind of looking at customer creditworthiness and things like that was something that was really well placed and important to GAMA. So I suspect again it's just feeding through into good numbers that maybe are hard to see, but they're there. So I would say these are all opportunities. Hopefully they're reasonably fair. And now let me do my best to look at threats and challenges. Now, historically, when I've tried to create a bit more of a balance, like yes or no, it's been very easy for me to identify both. Because I'm so bullish on GAMA, it was a little bit more tricky. But let's see what I was able to come up with in terms of challenges anyway. All right, so the first one is basically European expansion is still pretty new to GAMA. That will create operational issues. Interesting, my last employer, you know, like we took a platform from Germany, from a German business, and it had all kinds of differences, you know, and like my current employer also operates in the German market, and again, it's very different to both the Dutch market and the UK market. You know, regulations are different, expectations are different, etc., etc. So we shouldn't discount this, right? Like, and again, for anyone, like, especially if you're in America, there's significant differences within European countries. This isn't a Brexit thing either. Or like I say, like I deal at the moment in my current employer with the Netherlands and Germany very closely, and France and Denmark less closely. Every one of those countries is very different to each other and to the UK. In terms of expectations and requirements. So again, GAMA will also need to be mindful about those challenges. The market remains incredibly competitive. You know, the UK, Netherlands, Germany, the three that I think I know best of all, and where GAMA is operating. All of these markets super competitive, big price pressures, big performance demands, and you know, and ultimately as a telco, if you're not able to meet service requirements, you end up having to start discounting to basically appease and keep customers. It then becomes a race to the bottom. So, like you have to make sure that you stay on top of your service and your support and everything else in order to try and give yourself a bit of a differentiator that isn't based purely on price. And again, that's going to be important for me to make sure that Gamma's margins hold up. We want to be seeing some improvement in the German business they bought. No fault of Gamma, right? But they need to kind of start showing movement within that German business. That does actually have a material impact on their segment splits, right? A year ago, only 5% of their revenue was derived from Europe. Now we're looking at 16%, and again, like that's therefore increasingly important that they get that right. Although Gamma was, and I believe still is, significantly ahead of the technical curve, there are competitors who will emerge. My last employer was sold for $1/3 billion. And specifically is in, the UCaaS FMC space, that mobile SIP integration, and it was ultimately acquired by BT fully. O2 have a similar product, Vodafone have a similar product, right? And Gamma, although I think is still comfortably ahead of everyone I've just listed, as well as other less known companies, Gamma still need to make sure, right, that they remain ahead of the curve. And don't let that lead slip. So there will be challenges within each market to Gamma's superiority and I guess in the UK supremacy at the moment in the kind of IP world. Again here, like Gamma is a B2B player, so business to business. Any material recession, if business hits the wall, if either Brexit is a disaster or COVID happens, and okay, Gamma I would expect to be a short-term winner of COVID. But like if businesses ultimately start hitting the wall, maybe those bad debt numbers will increase and you'll have kind of this runaway snowball. Maybe, I don't think it's especially likely, but who knows, right, how bad a recession could be. And I thought I'd put this one in there as well, because like I say, the reason why I now have a fairly large stake in Gamma is because after a inline profit trading update on the 5th of September, Gamma's shares got absolutely smashed. I thought it was completely unjustified. For me, I was waiting for an opportunity to buy Gamma. My only regret is that I wasn't more patient. But again, I just got a little bit excited about such a fine business. And by the way, if you were to buy Gamma today, you would have an even better price than me. And I actually quite like my price. So there's always that as well. But yeah, arguably, like Gamma has almost become a victim of its own success. Maybe there was some disappointment that the dividend was only increased by 13%, whereas earnings were materially higher than that. I'm not sure. But for whatever reason, the market didn't like the fact that the numbers were just in line with expectations and maybe even arguably slightly ahead in terms of the European numbers. Some of those are already starting to improve. So maybe that's another challenge as well. Again, to be clear though, I think Gamma is an extremely good business and I'm not really sure how many of these are genuine challenges. Probably the European expansion has some concern, but I would have expected Gamma to be well read and well researched on this. I think the market being competitive is a genuine thing, but again, Gamma have built out a platform that scales very well. Their churn, their debt is all like way above what you would typically expect to see. And again, I suppose in fairness, like competitors emerging, like, yeah, okay, that's going to be the case. But I remember, like, again, when I first started working with Gamma, it was all about non-geographic numbers, right? The margins at the time were crazy. So that's things like 08 numbers and 09 and those kind of things for anyone UK-based premium rate, basically. Gamma was the big supplier to our business of these. And we're just making so much money. It was so easy. It would have been very easy for, like when Ofcom came along and basically put a stop to that. Not in an ideal way, but they definitely stopped kind of the gravy train that was there. Gamma pivoted like super duper quickly. It suddenly became all about SIP and all about mobile, right? Like we've already got all this infrastructure here, guys. Like, oh, and here's our SIP offer and everything else, right? And it was, it would have been very easy for a less capable company to basically say, damn, or not respond appropriately, or just think the game was over. But again, I would expect Gamma to keep on that kind of resiliency and adaptiveness to changing market situations. So these are what I could come up with, though. I think maybe they have some merit, and obviously do your own research and all that other good stuff. But anyway, so let's move on to pricing, what I think the shares are worth and what the market and analysts think the shares are worth. All right, so analyst expectations are pretty wide. You can see here on the top graph or top picture, it's really wide. Especially in terms of percentage, right? This is more than 50% of spread between lowest and highest. However, this is just across 6 analysts. If you average the analyst scores, they come in at 2104. Okay, now if you look at Simply Wall Street there, for anyone who uses it, you'll recognize the bottom picture. They're a lot more bullish. They think, they're definitely on the high side of those analyst estimates and they base theirs on DCF calculations and so on. So yeah, I think that's it. Now I did do some numbers on this. I basically came out pretty close to Simply Wall Street. I had about 24. Depending on some assumptions that I used and all the rest of it, but that's really based on a mix of forward guidance and historical 5-year trends. I did weight it 60-40, so on the forward guidance I did 40% and historical 60%, just because I actually think that some of the forward guidances could be a little bit higher. And the reason for that is I think kind of what I've already touched on. Like I actually expect GAMA to really start building on what I think is a successful foundation, and that we'll start seeing these numbers improve, right? That's what you're starting to see on the net profit going from sort of 12% to 17%. I sort of am expecting more of the same basically as the business becomes more efficient. So yeah, I did weight it slightly differently, but came out pretty close all the same. And to me, I mean, I continue to buy GAMA under 20 quid. Just because I think that 20% is a very comfortable margin of safety. I would even be considering going to 21 just because I think it's such a fine business and I want to hold it for a very long time. And yeah, that's basically where I get to in terms of our target here. Already covered that point. And yeah, I think it's just well positioned. Oh, and also just to add, I think that it's well positioned in terms of the change in the market basically that's coming up, right? The move away from legacy, the move away from landline, the move into things like fiber to the premises, fiber to the cabinet, things like for SIP and data usage more generally. And again, the importance of recurring revenue from a telco perspective is definitely there, right? They're no longer relying on usage to generate the majority of their profit. And again, compare that to 10 years ago when it was all about non-geographic usage. Margins that are in the thousands literally of percent just made everyone a lot of money very easily. That just doesn't exist anymore to make that kind of money in any kind of volume. So yeah, I just think all of those things are moving in its favor basically. So I suppose this video has already been super long, so let's wrap it up with a conclusion. Okay, so in conclusion, I don't want any pretense here of this trying to be like a balanced video. It's not. I can't fake it. I think this is a screaming buy. I believe in that so much. I put 10 grand of my own money into this company effectively. And yeah, I think it should be getting a lot more love. I think it's worthy of your consideration. And yeah, I guess I just want to make you aware that there's a very high quality company that most people have never heard of. Obviously, it's your decision whether you choose to invest it or not. But for me, it's worth consideration if you're either a dividend growth focused investor, which I know is very popular at the moment, or actually a value investor if you believe that the GAMA is underpriced. If you believe those more bullish estimates, then you're potentially looking at like a 30% upside here. Now for me, like, I can't resist a bargain, right? I've said this in several of my videos, right? I'm the guy who goes around a supermarket and sees a yellow sticker and just buys it because it's discounted, even though I didn't want to buy it in the first place. I can't resist a bargain when it comes to stock. I think I am primarily a value investor. Like, I've realized that over the last year. But actually, I have started to think about, that dividend growth side, and it's just lovely for me to find a company that's directly in my sphere of knowledge and comfort and everything else, right? That ticks both of these boxes. So for me, that's really good. And yeah, so if you're either one of those or both of those, then great. I do appreciate that for a telco, especially, GAMA probably looks really expensive, right? You're looking at like a 25 PE. Yeah, maybe it looks expensive, and I guess maybe that's why the market punished it, because again, at the time it was trading on like a 35 PE or 32, I think actually, and it just wasn't a good enough trading update considering it was just in line with expectations. However, for me, I believe that its performance, it's where it's going, what it's done, it warrants a premium. Has no legacy infrastructure to worry about, no kind of risk. It doesn't have to do things like spend billions or millions on spectrum because it basically just purchases from those guys who do have to do those things. It's a super well run, very scalable business that will basically grow without kind of the teething issues that you would typically expect. Or sorry, I should be more accurate, without as many of the kind of issues that you would expect from a small company that looks to be building. And I believe it's going to benefit from a lot of trends across the industry. Also, as well, it's an unusually revenue recurring business, especially in the telco world. It's already kind of made that leap basically from usage to recurring revenue. It has super low levels of debt. It's difficult to find the numbers, but I believe it will have very low levels of churn. It probably also has fairly high performance measures for things like customer satisfaction and etc. etc. Right? It's just, again, my experience, admittedly from yesteryear, but also kind of the other numbers just support that. So all of these things are kind of giving you more safety, I suspect, than you would typically get for such a small company. So it kind of has the best of both worlds, in my opinion. I believe it's well placed also to benefit from any additional lockdowns. So for me, this is kind of like almost like a hedge in a way, certainly in the short term, right? The next year or two, it's very plausible that we'll have kind of additional COVID worries and that kind of stuff. But I actually believe that GAMA is super well placed and arguably would benefit even more from any additional lockdown, right? It's already shown it can come to the market very quickly with new products. It's going to also encourage that kind of move from legacy to new world UCaaS, Unified Comms as a Service. And specifically by that, I mean mobile, SIP, and contact centers, and really kind of, again, leveraging value off the network that I think GAMA is extremely strong at. Obviously, it's a fairly small business. 1.7 billion is verging on penny stock territory to some. For me, it's not a problem, right? I think my smallest holding is about 400 million market cap, so I don't have a problem with these kind of sized companies. And actually, I think that's where some of the more interesting growth is. And for me, it kind of is in that sweet spot between kind of being big enough to have an impact, but not so big that any kind of growth is going to be modest. With a few exceptions, obviously, if we're looking at Microsoft or Apple, maybe you get the best of both worlds. But for me, this is a good play, and I think, again, like, maybe it's overlooked, or you shouldn't overlook it just because, maybe you're not a fan of utilities, or maybe you're not really a defensive play kind of person. Like, this is a good mix between having a utility stock. Ultimately, this is just a telco, right? But it's also got that growth story, that dividend growth story, potentially a value story. And again, for me personally, I believe that this is a very scalable, growing company that deserves consideration. So yeah, I guess I can't really say much more than that. I will be continuing to buy GAMA at these kind of prices, and I have been for anyone who follows my my trading updates. But yeah, let me know what you think anyway, if it's something you consider. If you do consider it, then really good luck, and I think you've picked up a bargain at the current levels. But whatever you decide, thank you very much for making it this far. It's a bit of a mission, and I really appreciate it. I've been the Boss Hog. Good luck with your investing, and again, thanks for watching. Bye for now.